Good morning. It is Friday, October 28th. Going to take a look at the morning charts here. But first, I want to start off with the momentum and kind of recap on yesterday's surge in the equities market and kind of show you where we stand on an overbought, oversold condition. Now, if we just look at this market momentum chart, this is courtesy of barchart.com. There's a couple of things I like to look at. Here is the momentum for the day. There's a little mini chart on the side, and if you click this, this is that range I've been showing you that signifies if more or less the market is overbought or oversold on a short-term basis. So if we just look at this chart, I've pointed out anything above the 90 or the 101 area I consider to be overbought. Anything when this bar chart is below the 99 I consider it to be oversold. Now you can see during regular, well, there isn't really regular trading sessions anymore, but during more regular normal market conditions, you can see this range kind of just gets pierced and touched. And as soon as we get into headline driven news or headline driven market with volatility, you can see how big this is. But overall, you still look at it the same, and you just have to realize that, something above 101, you still have to be cautious, but it could continue to go higher. So anyways, what we have here is simply yesterday we had a huge move to the upside, and you can see where the market is stretched way into an overbought territory. And this momentum chart more or less is just showing that everybody was piling into the market in the same direction, and it had moved too far of a percentage wise in a short period of time, and it's likely to come back to the medium and the middle here and possibly even go back into an oversold condition. So we'll just play that by year, but this is one chart it's good to keep an eye on, because when you get to these extreme overbought levels, you've got to be trimming your profits or moving your stops up, or both. You don't want to be buying along usually when the market is this stretched this high. Now if we take a look at stocks trading above their 20-day moving average, I pointed this out the last couple of days. That is this area right here. 91% of stocks are trading above the 20-day moving average, and that means the stock market is run up very strongly, but it is more or less running ahead of itself, and it's getting a little overbought also. So I'll just pull this chart up. Just load here. So this is stocks trading above the 20 period moving average, and what you can see, pretty straightforward. Anything trading above 75 in general, excuse me, I consider overbought. You have to be moving your stops up, and you don't really want to be initiating any new long positions once the market is up in this territory. You got to be very cautious. And of course, anything below pretty much the 20 or lower I consider to be oversold. Usually if you get a dip down into the 15, you get a much stronger signal, but anything below 20 I consider to be oversold, and you've got to be cautious. If you're short, you want to be tightening stops. You don't really want to be initiating new shorts unless you're very aggressive and move your protective stops down with you, or quickly take profits if you get a continued push lower. So that's kind of where we stand. You can see yesterday we went higher here, and we are stretching almost to, we're getting close to the 100% of stocks trading above their 20 period moving average, and that's pretty rare. We don't see it get this high. So I do feel as though we've got a momentum change, that the market does want to go higher, but I do feel as though there's going to be some profit taking in the market, and we'll probably see some type of pullback. Now if we just take a quick look at the volume analysis, kind of tells what traders were actually doing. This chart down at the bottom here, I'll just highlight it. We've got advancing shares and declining shares for the NYSE and the NASDAQ. You can see here, yesterday we had pretty much, if you look at the buying volume and the selling volume, we had about 19 people buying shares to every one person selling. So the masses were all piling into the market, and that's what just caused the feeding frenzy of higher and higher prices and run up right into the close. So that's kind of a sign that we have to be cautious, because if everybody's piling in, we're going to start to see profit taking by the big guys, and once the market starts to slide, we'll probably see some selling pick up, and it could provide us with an opportunity to get long now that the trend has more or less reversed back to the upside. So now let's just jump back to the actual futures charts. We'll take a look at the charts of the US dollar index. This is the 4-hour chart of the US dollar index. I'm zoomed out about a month and a half, 2 months, and this is a 4-hour chart. But today I overlaid this blue line, which is the SP 500 futures, and it just goes to show how it moves inverse to the US dollar index. And if I just zoom in to this current price action, you can see this morning, yesterday we had a big drop in the US dollar index that led to yesterday's big rally. The market closed at that level, and in overnight trading we're seeing the US dollar more or less flag sideways, and we're seeing equities more or less pull back. This looks like a mini bear flag, looks like it still wants to go lower, which means the equities market could push up for another couple days, but I do feel as though it's going to start to get pretty choppy. The stock market will want to top out, and I do think there's maybe only another surge or two lower on the U.S. dollar index before it actually puts in a little bit more of a bottom, and then we might see a decent little bit of a pullback on the equities market. Now, if we just zoom out on the futures here for the dollar index, you can see right where we're trading, we are right into a pretty key pivot zone. We've got a pivot low here, pivot high, pivot highs, and then we had a breakout here, and there was a spike pivot low back down to this level. So we are trading down at a pretty key support zone. I wouldn't be surprised if it pushed even more into the middle of this price action, somewhere right down into here. And of course, if we get this one more drop, we're going to see another surge in the equities market, and then I think we're going to see the dollar try to probably put in some type of bounce, and we'll probably get some type of pullback in the equities and commodities market, at which point we'll be looking to load up and go long. So looking at crude oil, with the US dollar moving sideways through overnight trading and upwards a little bit, we've seen crude oil actually pull back a little bit today. It's pulled back this morning. Overall, crude oil is trading up at a nice level. We are trading above key resistance, or yeah, we're trading above key support. Sorry, and more or less it's forming a little bit of a possibly a pennant. We can see how that kind of forms out here, but we had a nice surge to the upside on the breakout, and now it's consolidating. So I am looking for a possible long entry on crude oil here. But I really want to see what the US dollar is going to do this morning, if it's going to try putting in a bottom or continue with that mini bear flag and head down, which if it does, we may see crude oil start to move higher. And I think crude oil will trade very similar to the equities market, that we'll get another small surge higher, and then I think it's going to start to become pretty choppy, and then we could actually see it pull back down into somewhere into this level. There will be a major support zone down here, this support trend line, so we could see it come back and actually shoot higher one more time, suck in the longs, and then kind of spit them out as it breaks down and probably breaks a couple pivot lows and tests the support one more time. And that's kind of what I'm feeling may happen. We may end up trying to take advantage of a nice surge to the upside here, as long as I see something on the intraday chart. But today being Friday, I really want to see how the week is going to play out, what the big money investors are going to do into the close. Are they still fearful? Are they going to unload, or are they going to be buying and covering, say, their shorts if they've got large short positions? It's going to be a pretty dicey day, a 50-50 bet going into the market, into the close, if it's going to rally or sell off. So we got to be cautious. So I'm not really looking to take a trade today in crude oil or pretty much any investment. I want to see how today pans out with the news and what investors are seeing long term. Now here's the gold chart. We had a nice run up, and this morning we're seeing gold chart pull back a couple bars with the US dollar moving up a little bit. Pretty much just an inverse pattern, more or less, of what the US dollar is doing. I do like gold, but again, it's had a nice move to the upside. I would like to see a little bit more of a pause here, and I don't really want to get into a position on Friday. Silver is doing much the same. Had a nice really push up yesterday. It's starting to pull back a bit. It is trading right into a key support zone. If you just look at where it peaked out here, it's going right through the middle of this noise. So you've got congestion here, pivot high, pivot high, pivot low. More or less it just traded up through there and then broke down, and then we had a pivot low. So it has come up, touched a pretty key resistance level. It's starting to pull back this morning, and we'll see what happens there. We do have around a support zone somewhere down around here. There'll be a smaller support zone somewhere down here. So we'll just see how that plays out. As for bonds, yesterday we saw money pile into stocks, and that usually means it's a risk on trade. People are piling into stocks to get more leverage, get some more gains, and they take their money out of the safe havens, which is here. This is the bonds. So we saw bonds actually break down yesterday, and what I'm looking for is if we do get this little reaction, we might see bond prices work its way back up to this breakout zone, at which point we'll be looking to possibly take a short position in bonds, go long stocks, and we may be looking at shorting the euro also, but we'll just see how things kind of play out going forward. As for the SP 500, I kind of just covered that this morning, but this is the SPY ETF, and it clearly shows the gaps that we have in the market. So here's the recent run, and you can see the big gap we had yesterday. There's a lot, that's a big window that should be filled. Usually a gap that size gets filled. So we've got this level here. I wouldn't be surprised if we see prices, they could run up. We could see prices get a little choppier, but move higher in the next couple of days. But eventually, I have a feeling we're going to see a sharp drop. It's going to cleanse the position, fill this window, and then from there, we're going to see extreme fear sentiment kind of set in. We're going to see panic selling, and that's when we'll probably be looking to get a long position, is once you get this bull market, kind of a bucking bull market. And what it does is usually in a bull market that's moved up, it'll have a very sharp drop, and it'll just pick up a day or two later and continue running, but it just tries to buck everybody off the bull. So that's kind of what happens in a bull market. So we're actually looking for a sharp pullback now, and when everybody freaks out and panics out and it creates that big drop, we'll actually be looking to get into a long position. Now looking at the futures chart, I kind of showed you with it overlaid on the dollar index, the blue line. But this is the 10-minute chart zoomed out 4 days. And just to show you what happened yesterday, this is yesterday's price action, the strong volume at 9:30 to 4. So it's regular trading hours. But overall, we saw a nice move to the upside as the US dollar went down. And the US dollar is now kind of flagging and kind of moving up a little this morning, and we're seeing the equities market flag down in the opposite direction. So it's pretty much a flipped inverse chart of what the US dollar is doing. And this is a nice controlled pullback. I wouldn't be surprised. We have come right down into a support zone this morning. We have a pivot high right here, had a breakout and pause and a pivot low right there. And we've come down to that level this morning with a nice kind of controlled kind of glide down. It's settling onto it. Probably going to try and form a little mini base, and we could see it push a little higher today. But overall, we've got a gap from right here to more or less right here that needs to be filled. So again, if I was just draw that in with the gap window, this here, it's getting a little messy. It's the gap. So there's potential for the SP 500 to pull back pretty sharply in the next week or so. We'll see how things play out. Anyways, that's it for this morning, and I'll talk to you in a bit. Bye bye.